India's inflation is influenced by various factors, but some of the most important ones are oil supply and demand, geopolitical tension, and weather conditions. Let's look at each of these factors in detail. Oil supply and demand. India is one of the largest importers of crude oil in the world, with about 85% of its oil consumption coming from abroad. This makes India highly vulnerable to fluctuations in global oil prices, which depend on the balance between oil supply and demand. When oil supply is tight or disrupted due to factors such as production cuts by major oil producers, sanctions on oil-exporting countries, or geopolitical conflicts in oil-rich regions, oil prices tend to rise. This increases the cost of importing oil for India and adds to its current account deficit. Higher oil prices also feed into domestic inflation by raising the cost of transportation, logistics, and fuel subsidies. For example, petrol and diesel prices rose by about 23% and 11% respectively between July 2020 and July. Higher fuel prices also have a cascading effect on other goods and services that use fuel as an input or a transport medium, such as food, electricity, and manufacturing. Geopolitical tension. Another factor that affects India's inflation is geopolitical tension, especially in regions that are important for India's trade, energy security, or strategic interests. Geopolitical tension can create uncertainty and volatility in global markets, affecting the prices and availability of commodities, currencies, and financial assets. For example, the ongoing Russia-Ukraine conflict has raised concerns about the stability of Europe and the potential disruption of natural gas supplies from Russia to Europe. This has pushed up global gas prices and also affected India's energy imports from Russia. Similarly, the US-China trade war, the Iran nuclear deal, the Afghanistan crisis, and the Indo-Pacific rivalry are some of the other sources of geopolitical tension that can have an impact on India's inflation through various channels. Weather conditions. A third factor that influences India's inflation is weather conditions, especially rainfall and temperature patterns. India's agriculture sector is largely dependent on monsoon rains, which account for about 70% of the annual precipitation. A normal or above-normal monsoon can boost crop production and lower food prices, while a deficient or erratic monsoon can reduce output and increase food inflation. For example, in 2019-20, India faced a severe locust invasion that damaged crops across several states due to favorable weather conditions for locust breeding and migration. This contributed to a spike in food inflation in late 2019, and early weather conditions can also affect other sectors of the economy, such as power generation, water supply, tourism, and health. Extreme weather events such as floods, droughts, cyclones, heat waves, and cold waves can cause damage to infrastructure, disrupt economic activity, and increase human suffering. To sum up, India's inflation is influenced by factors such as oil supply and demand, geopolitical tension, and weather conditions. These factors can create supply shocks or demand pressures that affect the general level of prices in the economy. The Reserve Bank of India, RBI, monitors these factors closely and adjusts its monetary policy accordingly to maintain price stability and support economic growth. India's Finance Ministry is implementing an umbrella policy that aims to provide fiscal support to various sectors of the economy, such as infrastructure, health, agriculture, and MSMEs, while maintaining fiscal prudence and macroeconomic stability. An umbrella policy is a policy that covers multiple aspects of a subject under one framework. For example, in the Union Budget 2021-22, the Finance Minister announced an umbrella scheme for health called PM Atmanirbhar Swasth Bharat Yojana, which will cover preventive, curative, and well-being interventions for health. Similarly, the Finance Minister also announced an umbrella body for higher education institutes in 9 cities, which will have 4 separate bodies for standard setting, accreditation, regulation, and funding. The umbrella policy approach is intended to streamline the governance and delivery of public services, reduce duplication and fragmentation, enhance coordination and synergy, and improve efficiency and effectiveness. The finance minister said that the umbrella policy will also help in achieving the vision of Atmanirbhar Bharat or self-reliant India. The finance ministry has allocated 5.54 lakh crore for capital expenditure in 2021 to 22, which is 34.5% higher than the revised estimate of 2020. This includes 2 lakh crore for states and autonomous bodies for infrastructure development. The finance ministry has also proposed to create a development financial institution, DFI, with a capital of 20,000 crore to finance long-term infrastructure projects. The DFI aims to have a lending portfolio of 5 lakh crore in 3 years. The Finance Ministry has also increased the allocation for health and well-being by 137% to 2.23 lakh crore in 2021. This includes 35,000 crore for COVID-19 vaccines and 64,180 crore for PM Atmanirbhar Swasth Bharat Yojana over 6 years. The Finance Ministry has also announced a new centrally sponsored scheme for agriculture infrastructure with an outlay of 1 lakh crore over 5 years. The scheme will support post-harvest management and marketing infrastructure for farmers. The Finance Ministry has also announced several measures to support the MSME sector, which contributes to 30% of India's GDP and 48% of its exports. The Finance Ministry has proposed to increase the allocation for the MSME sector by more than double to 15,700 crore in 2021. The Finance Ministry has also extended the Emergency Credit Line Guarantee Scheme, ECLGS, till March 31, 2022, which provides collateral-free loans to MSMEs affected by the pandemic. The Finance Ministry has also announced a new scheme for credit guarantee to microfinance institutions, MFIs, that lend to small borrowers in rural areas. The Finance Ministry has said that the umbrella policy will help India achieve a sustainable and inclusive growth path in the post-pandemic era. The Finance Ministry has projected a nominal GDP growth rate of 14.4% for 2021 to 22 and a fiscal deficit of 6.8% of GDP. The Finance Ministry has also set a target of bringing down the fiscal deficit to below 4.5% of GDP by 2025 to 26.